Okay, let me now welcome on board Nitin Raheja as well and ask him about what he's making of the market. And Nitin, clearly gleaming with the fact that earnings have managed to come as a beat and a surprise pretty much across sectors, X, of course, OMCs. Just wanted to understand what is it that you've identified in terms of investable propositions post the earnings?
No, so I think you're right. I think the earnings have been, have been a beat and actually been pretty strong when you exclude OMCs. And, our universe was showing us in excess of 20% with, of course, a small margin impact. Through all of this, I think there are, if you look at the stories across, what we clearly see is that, of course, BFSI has been one space which has been relatively strong. We've seen the entire, if you were to call it the power ecosystem space in terms of the whole supply chain which goes into the transmission side, being very strong, whether it's cables, whether it's electrical components, equipment engineering, and so on and so forth. That has also done very well. Also, there are parts of the consumption chain. So whether it's autos, whether it's retail. So it just seems like this has been an exceptional quarter, if you ask me, which is more than the surprise. It's the fact that it's been pretty broad-based.
Okay. Nitin, some of the movers today, the likes of a Schneider, is there a view there? And is CapGoods Industrial something that you're looking at, that entire space?
Yeah, so, without talking in specific stocks, but I think, yes, CapGoods as a space is something that we are looking at. We think that, the whole data center story in India is just about starting. And that means that in India, you will get to play the Indian equivalent of the picks and shovels trade, as people talk about, which is the entire, like I talked about, the entire ecosystem which goes into setting up the data center. So right from, whether it's switch gears, electrical equipment, cables, the EPC guys. So I think you will see that. So overall, yes, on the CapGoods space, we are quite positive.
Right. Quite interesting, Nitin. And, the picks and shovels space within the entire AI theme is what most people are betting in on. Other than this entire AI theme, what else looks like a structural story right now that one can invest in?
I think, people have talked ad nauseum about the BFSI space, especially private banks. And I would believe that that's a segment which is finally probably going to start seeing things looking up for them. Because, look, with this whole FCNR in play, there's ample liquidity in the system. Credit growth has shown very strong resilience. And I think while the initial part of the credit growth has seen corporate lending and which has impacted margins to begin with, but I think you should see the low base impact of this corporate lending over the next couple of quarters play out, and you would see margin expansion take place. So I think overall valuations out there look very, very attractive, with growth sitting on top. Growth was missing in that space. So while valuations were in favor, growth was missing. So BFSI is the one space that we like within that. We also think that with the festival season around, consumption should do well as we head into the last quarter of the year in a month's time. So that's the time when you normally see the consumption space coming back. So yes, I think these are some of the broad themes we like.
Okay, time to slip into a very short break, come back, continue chatting with Nitin, Ruchit and Kunal. Stay with us.
Well, recovered most of our morning losses while we are attempting to dash back into the green, facing some amount of resistance. Metals, of course, is that one key gaining pocket. Tata Steel, Hindalco, Nalco, these are all names which are holding out well in trade. Reliance as well has perked up a little bit. ONGC, Axis Bank, along with Kotak also are the ones which are contributing to today's move. Voltas is now down 4.5%. Some of that move that you had on Friday with telcos, Idea being a case in point, that's getting undone. It's down about almost 3%. Cochin Shipyard is reacting to its earning. It's down about 3%. And IT as a trade is not really being able to withstand as well. So Infi, HCL Technologies are your rank underperformers today, along with BSE, which is also down about almost 3% or so. On the flip side, NAM India is the one which is holding out well, and Motilal Oswal continues to hold up a solid 6% as we speak. Richard, curious to know, how are you proposing to trade, and if at all you are trading IT names?
Well, we have recently seen a decent pullback move from the lows, and if you look at last 7 or 8 trading sessions, the Nifty IT index has resisted around its 200-day EMA, which is the long-term resistance for now. So I think one should wait for some more dip, maybe around 30,000, where the 50 demo for the index is placed. If it comes over there, then one can look for taking some counter trades in the IT names. But for now, I think these are not the levels where I would suggest going aggressive long on the IT. And it dip towards 30,000, one can look into it.
Ruchit, what's the take with regard to our PTC industries? What's the view there? And from within defense, what are the favorites?
So structures are looking quite bullish for PTC industries. A long phase of consolidation was there. Today, the breakout has been seen, with that too supported by good volumes compared to its daily average volume, which is 6. I think the stock has potential to rally towards 22,500 to 23,000 in the short term itself. So I think this should do well in the near term, even at current levels, although it's up by 8 to 9%. Still, if one has to take any long positions, one can take a fresh long build up long positions there too. Among the entire defense space, other name Paras Defense, we like from a positional perspective, clear relative outperformance within the defense space can be seen over there. Even when the defense as a space went through some consolidation or a corrective phase recently, this is one stock where we have not witnessed any kind of selling pressure. In fact, the dips towards that 20 and 50 DMA were bought into. So the clear outperformance is seen over there too. So Paras Defense positionally has potential to rally towards 1600 kind of levels. So PTC Industries definitely looks good. Paras is one stock which traders can also look for the short term.
Okay. Also, with regard to some of the other movers in trade, Voltas was one of them, and we spoke with management. Richard, what's the view there? 4% lower on that stock?
It's not that positive. In fact, if you look at last 2 or 2.5 years, we have not seen any kind of returns coming in Voltas. In fact, March 2025, the stock was around 1250 to 1300. Still, the stock is trading around same level. So no kind of trended moves are there on Voltas. So I think that broad consolidation should continue.
Ruchit, your picks?
Yeah, so banking is one space that we believe can take the leadership from here on. Bank Nifty is trading at its very crucial support of 57,000 rupees and 500, which is a rising channel. So we are expecting a good momentum in case of the market have to move, then should be led by banking space. Within the banking space, Federal Bank is one stock from the mid-cap stocks where we have seen a good up move recently. After an uptrend, some sort of time-wise correction was there, so the stock could resume its broader uptrend. Overall trend remains strong over there. So Federal Bank can be bought at current levels, from a near short to medium term trading perspective. On the high side, one can expect levels around 370. One can go long with stop loss below 345.
Okay. Richard, thank you so much for that. We'll let you go. Thank you for the views.
Thank you.
All right, Kunal, your picks for the afternoon?
So I'll go with 2 buy calls. I would probably focus on 2 of the names which are now starting to look a little bit more attractive. Tata Steel, I think at current levels is looking attractive. The stock forming a double bottom formation on the daily charts, trading at the lower end of the price curve. The risk reward extremely positive. Bullish RSI divergence setup on the RE time frame. So would look at a buy with a target of 194. Stop us to be kept at 181. And the second would be a buy on Sona BLW, something which you've been bullish on over the last, I think, few months. The stock looking attractive at the current levels, trying to make a comeback above 780, 790 levels. Looks attractive for a near-term target of 840. Stop us at 785.
Okay. All right. So that's the take coming in. Nitin, I wonder what's the view with regard to the air conditioning business in India. You've got Symphony, again, weak set of numbers. Voltus also not the best set of numbers, but relatively more resilient in terms of the numbers versus the last few quarters at least. How are you looking at that space?
Well, these companies tend to do very well in the pre-summer run-up, generally speaking, depending on what the weather patterns are and so on and so forth. I think the valuations at where they stack up for all these companies do not justify the kind of growth that they have shown in the last few years that we have seen from them. So, but you will see them more as short-term tactical plays whenever the summer season comes around and so on and so forth. Longer term, what would probably happen and which will be very interesting for these companies would be when we have this whole data center rollout play coming. That's where these companies would actually start doing really well, because the orders that they would get from an industrial perspective, also a lot of them are working on cooling solutions, which could be growth drivers going ahead. But at the present moment, we think that they're almost fully priced.
From now, it will be back to festivities and the festive season would kick off, at least here locally. Wanted to understand any theme that you're betting on basis that, of course, consumer goods is one such case in point. But do you sense that there could be an uptick in consumption a year down the line from the GST 2.0?
So, people have talked about the high base impact playing out and so on and so forth. But I do believe that you will see consumption do well. And I think the best way to play that is through retail, because then that's sort of you're taking a far larger basket and playing that through. And the other way could be through autos. Also, as the consumption season starts, you could see real estate do well, because there's a lot of, launches that take place just as the season is starting.
Okay. Nitin, also curious to know, what within auto are you liking and how are you playing that space?
Well, within autos, we continue to like the sort of PV plays out there. We also like the two-wheeler plays. I think both of them have shown remarkable resilience. And, I think the overall pack looks pretty good. And tied to that, the auto anchs are also, which, have created a lot of wealth. So we think we like the entire space.
That's quite interesting. In fact, the one other factor that's, one's talking about since this weekend has been the rupee, which is under fresh pressure after the RBI shortened its NRI FX swap window by a month. In fact, the currency slipped to 95.6 per dollar, while importer demand and high oil prices added to the pressure. The RBI intervention is cushioning the fall, of course. Meryl is here with more color.
Right, so the rupee is back under pressure, weakening about 0.2% to 95 rupees and 60 paise against the dollar, hitting a 2-week low. The trigger is that the RBI has shortened the NRI FX swap by about 1 month, a move that has surprised the markets. Remember, the scheme had already attracted more than $50 billion, and Bank of America estimates that total inflows could potentially reach around $80 billion. So any curtailment now raises concerns over future dollar inflows and rupee support as well. This comes despite earlier RBI commentary suggesting that there was no immediate plan to shorten the window, and at the same time, importer dollar demand is also adding to that pressure. While the RBI is likely to cushion the fall through intervention, including dollar sales via state-run banks. The pressure is also visible in the forward market. 1-year USD INR forward premium has now risen by 8 basis points, reaching up to 2.79%. The big risk now to watch remains crude oil. Brent is hovering near that $88 per barrel range, and higher oil prices could now widen India's import bill and put further pressure on the rupees thereby. The silver lining, however, is that the dollar index is softer at around $99.4, while stronger Asian currencies are providing some support as well. So for the rupee right now, it's a tug of war between RBI intervention and external pressures, with crude and dollar inflows both remaining key variables to watch ahead.
Okay, thank you so much for that, Meryl. Nitin, you believe this could be a concern with regard to the rupee? You've seen a bit of pressure on the rupee at this point in time, and could that essentially delay FIs coming back?
Surely, of course, if the rupee remains under pressure, that will, make a lot of FIs wait. But I think the important thing really also is there are two things here, right? When you interpret this RBI move, it could be a move which interprets confidence, because if you were looking to, they're essentially saying that they've got what they wanted to achieve that. It's also a signaling measure. And, however, like I said, against that, oil prices are the key concern. I mean, if oil prices remain elevated, that would put pressure. So I think the key to monitorable to watch is oil. On the FIIs, my own view is that, look, it's not so much the FPI flows that impact the market or have impacted the market as much as fresh supply of paper, right? Because if you see DII flows, they have been exceedingly strong, by a factor of 2 to 3 times what FII flows are. It's just been that the supply of paper has been tremendous, and also with PE fund selling, promoter selling, and so on and so forth, which has impacted our markets. I do believe that with strong earnings that we are seeing, our valuations are becoming attractive by the day. So I think at some stage you will get to that where the valuations themselves become very attractive for FIs to start coming back.
Okay, that's the take on, where exactly the impact of, all the moves are going to settle in at for the rupee, which continues to stay under pressure as we speak right now. Just looking at some of the other themes in the market, and clearly the entire wind RE theme seems to be playing out. We talked about Suzlon, Inox Wind is up 6%. And yes, capital markets as a theme continues to hold out well. So while BSE is a drag today, that's not the case with the Motilal Oswal or Anam India. Nitin, another one of those structural stories, the capital markets theme?
I think we are in for a long term on this. I think there's been a structural change as far as this is concerned, especially post-COVID. I think people who sort of entered the market at that time are yet in the money by a margin. I don't think they're going in a hurry. Equity as an asset class is here to stay. So I think capital markets will continue to be a very strong story. Although if you look at the valuations, they are not really the most cheapest in the sector. But I think if you're playing this for the long term, yes, it will continue to remain a very strong story. Also, it's helped by the fact that it enjoys favorable taxation. So even if tomorrow you earn as much as in a bond, the fact that you're paying less tax itself gives you a big head start. So I think this is a whole long-term story that one should have in each portfolio.
All right. I wonder what you're making of the real estate pack, Nitin. You had some good numbers coming from Puravankara, and even overall, realty, there was some bit of slow execution in certain pockets, but outside of that, it's been a resilient quarter.
Yeah, I think real estate has surprised everyone for the cycle which has started in the last 3 or 4 years. And you had this period where real estate as a pack underperformed for some time. But I think we are gradually starting to see signs of coming back. And normally, like I alluded to, especially post the period which we call as Shraddh out here, you have this whole festival season which starts, and you have these pre-bookings and so on, so forth that take place. So you should be getting into a season where you see more launches to take place, and that should work well for real estate.
Okay. I don't know if you track stocks closely, and I know that you can't speak specific counters, but within the pharma bucket, how would you play it broadly, if you can give us your take? Because, again, it's been quite divergent in terms of the trend. Some stocks like Laurus, etc., have done very, very well for themselves. Even Divise's numbers were very surprising in terms of the strength of it. But there was a certain pocket which was weaker as well, Cipla and the like.
So you're right. You yourself alluded to that it's been pretty divergent. So the way to play pharma is one is, of course, from a domestic pharma perspective, I think the story is quite strong. And you are seeing that happen across the board. So one way to play is domestic pharma. The other way, when you're playing generic or export pharma within CDMO, given where valuations are, you have to play it on a bottom-up basis. And each company is placed differently depending on its product basket, where it is with respect to the generics. So I think you will have to play that on a pure bottom-up basis.
Okay, that's bottom-up ideas within pharma is what Nitin is recommending. Let's take a very quick break. We'll come right back with Nitin Raheja and Kunal Bothra.
Welcome back. Reference price closing in, which is a 315 price, and you can see some movers post that as well. And we'll continue to get you updates with regard to how those price movements are playing out on the street. But let me go across to Meryl. She's here with some of the stocks you want to keep on your radar for today's day of trade, of course, whatever's left of it. Meryl.
That's right. So we've seen Ipca Labs in focus today after the company upgraded its full year FY27 revenue growth guidance to 14 to 16% range and EBITDA margin guidance to 23% from the earlier mentioned range of 22 to 23%. This reflected strong business momentum that the company saw in the first quarter. Exports surged 34%, which was led by Europe, while API revenues also grew 30%. Next up is Unichem. The company did reported margins at 11% in the first quarter, with potential to reach mid-teens highlighted in the medium term for them. Next up is for the other stocks that we're also seeing in focus today is Belrise Industries. Revenues for the company grew at about 12.5% on a year-on-year basis. EBITDA also grew about 4.3%. The stock was down even after delivering sort of an inline performance. This is because the margins for the company overall missed expectations, with EBITDA margin declining to 11.5% from 12.5% in the previous year. Puravankara was also in focus. Revenues were seen up 62% on a year-on-year basis. Net profit saw a swing to profit from a loss reported in the last year. EBITDA was also up more than double this time around. We've seen the strong performance, which was backed by improving realizations and also disciplined execution across its residential and commercial portfolio. Last but not the least, Voltas was in focus. The company reported sort of a miss on both revenue as well as EBITDA in the first quarter. PAT did beat estimates, but margin came almost in line with what the streets were expecting. So that's why we saw this kind of move in Voltas as well.
Thank you so much for that, Meryl. Those are just some of your big movers in trade. But while we're at it, I want to quickly mark out how rates are settling in the cash segment today. And post the reference price, you're seeing a bit of pressure on the Nifty. Post the 315 mark, we're down around 0.4% thereabouts. Kunal, what's the view here? What's playing out and what are you spotting?
So yeah, I think there are few, so the scope of transactions are slightly increasing. In the last 2 or 3 days of the cash, we'd actually seen that the average volumes had dropped down, till around 320-25 approximately. We were clocking around 750-800 crores in terms of the average turnover. That's so far today, at least, seeing that slight bit of an uptick. We have crossed that 900 crores so far. My assumption is that in the next 5 hours, we could probably 5 minutes, we could probably cross maybe that 1,000 crores mark, which could be a decentish kind of a indication that the markets are now trying to get a little bit more accustomed. In terms of the closing, yes, there are a few stocks which have started to show those initial signs. Trend, for example, showing a change of 1%. PG Electroplast, I think 2.5% odd. So we need to see how this really impacts the benchmark indices. So far, it looks to be more on the stable note.
Okay. Sajid, you want to weigh in with regard to F&O and what's playing out?
Not much happening in the F&O actually. If you look at, from 1 p.m. onwards, we have seen some kind of put writing coming into play. We saw, I think, the the banking stocks which were down in the early morning trade, rebounding. So there's a short covering which is coming in for Nifty Bank, and that's what we saw during the second half of the day. But again, a lot of FNO. In the FNO, you have seen a lot of put writing which is coming in, and especially a day before the weekly expiry, there is a lot of put writing happening at 24,200 levels, with some positions now built for next week in 23,700. That's something which is active now, 23,700 level strike which is active for the puts, and that could also basically means we're drifting towards a little lower in the market, if you look at how it's panning out as we speak.
Yeah, so that 23,700 mark could be maybe an indication that we are maybe trying to take some good support on the index levels. From a weekly option basis, I think the more OI dominated strike what we are looking at is 24,300. That is a more important pivot support, and we've been hanging around this 24,300 mark broadly for the last few trading sessions. So it's just that it looks like that maybe this 24,300 mark is where I would sense that the markets can hold on. If in case there is any kind of a sudden change across the globe or the data point across the global scenario, only then is where I would expect the markets to break this chain of consolidation and then maybe try and go into a retest at 23,700 mark. So far it looks unlikely, but we'll see how it evolves during this week.
If I look at the cash stocks, Ultratech rose nearly 1% during the cash session, followed by Max, DRL, you have Coal India. These are some of the big ones which we saw some kind of action. But at the same time, you had Kotak, which fell nearly 0.7%, then JSW, Mahindra, HUL, Asian Paints, and Apollo. These are some of the stocks where we saw some fall coming in the cash session there. So again, we're seeing some kind of covering happening in the if I'm not wrong, in some of the banking stocks as we speak. But overall, it seems like that we are just going along the entire trajectory of drifting down in the market.
I think we're still trading in a range, Sajid. I'll look at it this way, that we've taken a lot of time for the index to consolidate, and frankly speaking, the index is not the true, so far it's not the true highlight of what's actually happening across within the market, because you look at the kind of sectors and stocks making a comeback every now and then. Look at the real estate pack, for example. That's a classic indication of the mood of the market today. Index, because of its own weightage and the logic behind, is acting into a bit of a range, but 24,300 I would still believe is a good pivot support.
Yeah, and while the HDFC Bank may have ended 0.3% lower, and maybe Kotak ending 0.4% higher. Sorry, ended 4.3% higher, and Kotak ending 0.4% higher. If you look at how it worked in the cash, it's nearly 0.7% fall for both Kotak Bank and HDFC Bank is now nearly 0.3%. So the kind of position that we had before 315, there has been some the shorts that came into the system in the second half, as a result of which we've seen the Nifty Bank closing absolutely flat. It's 6.7 points higher actually in that sense. So that's something which is coming in from the cash market there. But the FNO market is open at this point in time, and we're seeing good amount of put writing which is coming in, especially in some of the stocks. If I look at some of the most active stocks in today's FNO trade, you'll find BSE 3400 strike call. BSE call 3400 is the most active, followed by HAL's 5100 call for the August series. And in the put side, we're seeing BSE 3300 and 3200 strikes being more active. Reliance 1300 put is also very active. But today is the day of BSE and HAL. How are these two stocks look for you?
Yeah, I think BHEL is something which is looking very attractive. BHEL, I think, has not at 430 plus levels. I would believe it's a strong indication of a fresh breakout, and it's a fantastic chart when we look at this over the span of the last 6 months broadly, from a point when the stock was at 240 or 250 start of this calendar year towards the point where the stock moved up towards 400 first. So there was this 140, 150 point rally for BHEL. And now the stock has gone through almost like a 2-3 months patch of a time-wise correction. So a classic comeback, a good retracement, a strong price consolidation, and now the stock seems to be getting ready for a breakout post this consolidation. So I think it's a matter of time. Maybe the stock may be a little bit more volatile over here, but if for someone who has a time frame of 6 months plus, then I think staying invested into BHEL is a good strategy. HAL, on the other hand, even though after this run up, it seems like there's some supply which is coming into the stock price at higher levels. 5100, 5150 mark is actually acting as a zone where the stock is taking a bit of a resistance, or there's a slightly higher supply. So I would sense that maybe the stock could come back towards minor corrections, say a couple of percentage points correction is what I would expect for HAL, but that could be a good buying opportunity.
Nitin Raheja is still with us. Nitin, how do you look at BHEL and maybe from an exchange point of view, BSE?
Guys, we don't talk stocks.
Okay. But as a sector, capital goods and electrical sector, how do you look at it?
So we like the capital goods sector, and I've talked about it earlier in the show that we are very, very bullish on the whole sector, and that includes electrical goods as a part of it.
Nitin, curious to know how you're looking at the entire energy basket as a whole, and how exactly would you play it? Some of the power financiers have also corrected, for example. Is that a pocket which you would consider at this point in time?
We don't like these companies specifically, although the valuations are very cheap. But I think we haven't seen the kind of growth rates that one should be seeing, given how the sector is doing. So we would rather play it through broader financiers as such. And as energy as a basket, really tends to give you it's more of a tactical play that you play from time to time rather than as a long-term strategic play in your basket.
And what about QSR, Nitin? Some of these names have rallied, 25% over the last, in fact, a month to date. How do you look at that pocket? And are the earnings looking structurally that strong?
So QSR has seen a revival. We've seen the ordering velocity go up. We've also seen some amount of consolidation in the sector, which has also helped this sector and as such. And hence, after a prolonged period of virtual consolidation or no growth, we started seeing the sector come up to and rally in the recent time. Now, in our own view, in the short term, I think the valuations look very, very fair in terms of where they stand. But I think longer term, the sector should do very well.
And how would you place your bets? There's one very large player there, and then there are a few small ones. How should one play the theme?
We think that this is again a sector where the large player will have a disproportionate market share and should benefit, and will be the ones who will set the model for the sector, and one should be there.
Among the capital markets play, Nitin, exchanges, how are you looking at them? There's a big exchange listing coming up in next couple of months. Do you see, and BSE is now going to be part of the Nifty 50 by the end of September. How do you looking at exchanges?
Well, exchanges are quasi-monopolistic businesses. If you see, once they have a significant market share in any particular segment, it's very difficult for a second exchange to come and disrupt that. And all the exchanges in India have, developed their, unique areas of stronghold and, maintain market share out there. Having said that, we think that what would also happen is, as you get more of them starting to trade, some of the premium valuation that you said would get sort of more dissipated as such. But structurally, I think they are great quasi plays on the capital market growth that we see.
Kunal, finally, after I think the Nifty is settling at below 24,300, 24,287.6. Do you see further fall from here?
Not really. I don't see a major crack, because the put call ratio, the market swings, the intensity of price correction is very, very shallow. I was actually looking at the global markets also, and it's not that there's some kind of a major turn back or a negative turn for the global markets. So I think on the back of this, my expectation is that we would just about try to consolidate. Over the last couple of days, our view has been that we are stuck into this 150 to 100 point range, plus minus 24, 350 for the index. And broadly, I think we will probably try and consolidate further for the next couple of days, unless you start to see some major cracks in the market internals. So far, the positive for the market is that you've not seen any major crack. For example, HDFC Bank, etc., we all been discussing, has been acting as a major drag for the index. But it's not that the stock price has cracked very hard, very sharply. It's just that it's just unable to lift off to any kind of a major recovery. But there are traces of markets showing signs that the sectors which have been underperforming, they are trying to make a comeback: real estate, defense, PSU banking names, IT, etc. Now, when you see that kind of a market mood, it tells you that we are not in a hurry to break any kind of a major support.
Motilal Oswal, the move today, 6%. Kunal, what's the view there?
Yeah, it's a very strong move because it's more the capital market themes. You look at Motilal Oswal. I was looking at Angel One, CAMS, BAC made a good comeback. MCX has come back towards a breakout, or at least a retest towards the previous highs of 2,700 levels. So there are many of the stocks. Key FinTech was the other name, which I think was up 4.5–5% the last I had seen. So many of these stocks had done very well for themselves, and it looks like that maybe the capital market theme tactically could start to be something which traders can try and bet upon.
Renewable energy, Nitin, is that something that you're actively tracking? We've seen a bit of a consolidation in the space, right? You feel that some leg up likely in FY27?
Well, I think renewable energy as a space, we would rather play it through some of the utility companies,
Okay.
rather than through some of the equipment manufacturers, because I think competitive advantage is more driven by duty structures rather than actual sort of economics.
Nitin, thank you very much for joining us today and giving that perspective. That was Nitin Raheja from
Thank you.
Julius Baer.